Tesla stock down over 5% today off of delivery numbers. Now I'm going to break those down. I'm also going to cover a few things that you might have missed. And I'll tell you if I think the stock is a buy or not right now.
These are not good, David. That's why the stock is down. Deliveries in the first quarter of 387,000 vehicles. Let me put that into some perspective. The FactSet consensus as of Friday, and it had been coming down, was for 457,000 vehicles to be delivered. First quarter of last year, the company delivered 422,000. So this is a year-over-year decline, the first since 2020 that we've seen from Tesla. And in terms of production, the company produced 433,000 vehicles. They do point out the fact that they had the change in the ramp up in production in Fremont as they come up with the new Model 3 Highland edition. They also had the Red Sea issue, also the issue with production at the Gigafactory in Berlin.
So obviously, you know by now that Tesla is one of the most polarizing stocks basically ever. I've been investing 25 years and haven't really seen a whole lot of companies like this. Has a cult following. And honestly, the CEO, Elon Musk, it's a love-hate relationship. Either you love the guy, anything he does, or you don't like the guy at all. Now, that's always going to create an interesting dynamic for the stock and for the company. As a long-term investor who successfully invested in growth for over 2 decades, I look at the big picture and I look very long-term. I try to see what the future might look like. I don't think there's any question that right now the company is going through some headwinds. Let's take a look at a few headlines. Tesla shares fall after deliveries drop 8.5% from a year ago. And this is Tesla's first year-over-year decline in deliveries since 2020. Basically during the pandemic. So total deliveries, 386,810. Total production, 433,371. Now what's interesting here is production declined about 1.7% from a year earlier and 12.5% sequentially, but not nearly as steep as the 8.5% annual drop in deliveries. Now, Derek, I know you and I talked about this in the comments on YouTube. We talked about how it could possibly, right now, FSD is something where Elon Musk is forcing everybody to get a test drive. Now, of course, these numbers aren't going to reflect that, but you have to wonder if that might impact things for the next quarter and the next quarter and so on. I don't really know for sure, but it is something to think about. It's something to consider. So FactSet took 11 estimates from analysts, and the expectation was around 457,000. That number has been coming down, but the estimates range from a high of 511,000 deliveries, which is way off, to a low of 414,000, and it missed all of them. Now, we did know about this, right? We knew that production would slow down because of this ramp up for the Model 3 at the Fremont, California factory. Tesla also faced other challenges such as attacks on shippers in the Red Sea and temporarily suspended production at its German factory outside of Berlin in January. In March, environmental activists set fire to infrastructure near that same factory, depriving Tesla of sufficient operation power and again, causing pause in production. Now, one of the big things you hear a lot about is the competition. You talk about Chinese competition, including BYD.
Not said by the company, but clearly one of the main factors, guys, what's happening in China. And we know what's happening there as they have lowered their production, and we've seen the announcements or the reports come out of China, and that clearly has an impact here.
Now, here's something that's really interesting that I found about BYD. BYD hands back top EV seller title to Tesla after Q1 sales declined. This just happened. So BYD sold 300,114 EVs in the first quarter, and Tesla had 386,810 deliveries. So what does that tell you? It tells you that EV demand is weak across the board. It's not just Tesla. But wait a minute. I thought the economy is doing really well. I thought consumers were doing well. I thought consumers were spending money. So what's going on here? I mean, looking closer at this with BYD, sales fell 43% compared to the fourth quarter of 2023. Now, of course, there are dynamics here because you're talking about China versus Tesla, which is a combination, right? You're not buying BYD vehicles at this point in the United States. And we know that the Chinese economy hasn't been doing quite as well as the US economy. But this quarterly drop from BYD gives Tesla the title back. So why are EV sales down? According to Motor Trend, it said that price is a factor. Even with the tax incentives, EVs typically cost more than hybrids, and many Americans are worried about charging their vehicles. If you follow this channel, you know that that has been my concern. Where I live, it's not easy to get access to charging stations. If you live in a major city, it might not be something to even think about. It might not be a concern at all, especially if you're just taking a Tesla to work and back, something like that, and you're just charging it at home. But if you're trying to use a Tesla to go cross country, well, depending on where you are in the US, there could be some challenges there.
I was going to say, Phil, full year estimates, I guess we can say goodbye provide us some two handles, right?
Oh, I think that's a given. Most were already bringing them under 2. We had a few people saying 1.91 million deliveries for the year as the estimate that they were putting out there. For some perspective, and I don't know if we can pull up the chart that we have showing annual deliveries, they delivered 1.81 million vehicles last year. And if they were to go to 1.92, 1.93, that would be about an 8% increase in deliveries. Now the question becomes, do they hit 1.81 million? Is there a possibility that they don't even make that? That possibility is out there, but it's early and a lot of things can change. Obviously, production is likely to come back much stronger and deliveries should improve in Europe. They've been clearing out a lot of inventory in the first quarter. And if things start to firm up a bit, then certainly we expect higher numbers in the second, third, and fourth quarter. To what extent remains to be seen. China's the wild card in all of this, guys. They are brutally competitive in terms of what's happening with EVs and EV pricing, and that's having an impact.
I'm a visual learner, and I'm guessing if you're on YouTube, you probably learned visually as well. There's a startup company called Megacharts, and I want to show you guys this. This is giving you some unique KPIs. This is for Tesla. So you go to megacharts.com, type in Tesla. It's got universal KPIs as well as these unique KPIs. And this is showing you that vehicle production that he just mentioned. So you can see in 2023, 1.8 million. 2022, 1.31 million. 2021, 936,000, and so on. This is very powerful for me as a visual, seeing this ramp up from 101,300 vehicle production in 2017 to 1.8 million in 2023. And looking at the revenue of Tesla, you can see how we've ramped up from 2016 to 2023. This company has really grown into itself. And of course, that debate is always, is this a car company or is it something else? I call this a clean energy conglomerate. It does have a lot of moonshots that aren't even really talked about or included in metrics such as Optimus, may or may not ever happen. We do know that energy storage, right? That is part of Tesla's business. You can see how that's ramped up from 2019 to 2023, and it's continuously growing. You can also look at stats like vehicle deliveries, services and other revenue, and more. You can also look at a chart here. This goes all the way back to 2017. This was a $21 stock, and you can see how it ripped up here in 2021, and it's been kind of a roller coaster. You saw the stock come down to almost $100 a share, I think $108 back here in 2023, early 2023, so just over a year ago, and now the stock's trading at about $165. But you can go in here and look at universal KPIs, insider trading, the cash and the balance sheet, dividends, of course, there aren't any dividends, ratios, and more. In fact, looking at cash and working capital here, Tesla has cash and cash equivalents of $16.4 billion as of December of 2023. So the company's in a great cash position. But this is called megacharts.com, and I do have a link in the description as well as in the pinned comments. And I have a coupon code that you can use. It's Fired Up Wealth. Check it out and see if it's a tool that you can utilize in your tool belt to be a better investor. So most of the headlines today are going to be pretty negative out there. This is another one here. Tesla releases Q1 2024 deliveries, disastrous results. Now going on to X here, looking at some of the bulls, the well-known names like Gene Munster, he says he believes Tesla's on the right track and the storm will pass. EVs are a better way to move a car company and autonomy is a better way to get around. Tesla's investing in that future while other car makers are slowing their investment like GM, Ford, and so on. Gary Black also on X, far below consensus. I checked out a couple other ones. This is a smaller account. Top 5 bullish spins on Tesla Q1 volumes that he's seeing. Tesla's not a car company. Only FSD matters. I just did a video last week talking about this. It's a supply, not a demand problem. Well, I could argue that maybe it's a little bit of both. Musk called off end of quarter push. That explains it. Oh, that's your opinion. I guess it's up for debate. Stock only down 5% suggests the bottom is in now. And BYD, as we already talked about, was even worse. Now, I'm a bit surprised today because the stock honestly is holding up pretty well considering the whole market's selling off. It's 166.41 right now, down about 5%. It got as low as 163.43. And later we will look at a chart and I'll tell you where I think the stock could go. There are a couple of key things to keep in mind, and I'll talk about those here in a second. Looking at profitability, A+ here on Seeking Alpha. If you look at at this, it has a D for gross profit margin, but it does have some very positive numbers here, including net income per employee, TTM, about $107,000. The growth has obviously slowed down, but 16.86% still for forward revenue growth. And the valuation, this is where it always gets a little bit tricky. Is this a car company or is it a technology company? If it's a car company, you're looking at a PEG gap TTM 2.17. Now that's not insanely expensive. Usually if it's one or less, that's going to be pretty attractive, although you don't see that very often in high quality names. The PE gap TTM 40.75. And according to Seeking Alpha, that forward gap, that PE ratio is a 66.18. So definitely not cheap, especially if you consider this a car company. Now Tesla will have earnings coming up. We're in earnings season here coming up next week. And April 23rd, we're going to get earnings from Tesla. Recently I did a video. I said 165 to 175 is a decent DCA area, dollar cost averaging area for Tesla, but I said it could go much lower, especially if delivery numbers miss. And now the big thing you're gonna have to watch is earnings. If earnings miss, if you have a really bad earnings report, this stock could go lower. Now looking at this trend line, this is a trend line kind of going down. Before I cover that, obviously it's self-explanatory. These earnings are going to be huge for Tesla. And we've seen the growth, slow down. We've seen deliveries slow down. The margins have compressed. Now the story here for a long-term investor, we're looking for those numbers to improve towards the back half of the year. Obviously, interest rates are not coming down quite yet, and that does have an impact on the stock as well. Another big thing to remember is that EV credits. There are some EV credits that are going away in 2024, and that is a risk if, say, there's a new administration and some of those EV credits go away. So there's certainly plenty of headwinds for Tesla. Again, I'm thinking about this company as a 5-year investment, knowing the stock could go lower and really wanting the stock to go lower because I want to buy more shares at a lower price. We broke slightly here to $160.51. You can see we're above it right now. And if you come down to the bottom where these two blue lines intersect, it's about $150 a share. I think if earnings are bad for Tesla, you could see the stock $150 or less. I am bullish long term though, and I do like this stock. I think the future is bright. It's going through a tough time right now. For me, it's a time to accumulate, thinking about 5 years or more as a long-term investor. If you're new here, make sure you subscribe to the channel, click that bell for notifications. And if this video is helpful, drop me a like, drop me a comment. Have a great rest of your day. Take care.